Hi, this is Dr. Prakash. Welcome to my show. We are back from the spring break, and I will talk about what is the status of the market and what opportunities are there to make either investments or trades in this current market. Okay, so let's go and share the screen, and I'm going to share my charts here. Okay, share. All right, you can all see that now. Okay, as usual, I will show you my disclaimer. Basically, this program is an educational program and the investment decisions are your own. Okay. All right. So let's look at how the market did over the last few weeks, few months actually. So year-to-date market. Let's look at that. So how did the market do? So the market started around 3,800, slightly above 3,800 in the beginning of the year. And then it really surprised many people and it started going up and it hit as almost close to 4,200. Then people realized, it has gone too much and slowly started coming down. And at that time, the Silicon Valley Bank crisis happened. So when that happened, it again came back to around 3,800. So between the beginning of the year and the Silicon Valley Bank crisis, the market kind of made a round trip and the gain was almost 0%. Then the Fed came and kind of stabilized the banks. And then some of the inflation numbers started looking very good. So the market started going back again. And now it's around 4,100, slightly below 4,200. So basically, if you look at this picture, this graph, the market has been somewhat in a trading range between 3,800 and 4,200. So even with this, all these uncertainties and banking crisis, the market has given you around 7.8% return year to date. However, there are two camps here. One of the camps says, things are going to get better, a lot better, because the Fed will stop increasing the rates and the economy will do reasonably good. Okay, so they're very bullish. Then there is the other camp which says, there's got to be a recession because whenever the Fed raises the interest rate so much, there will be a recession and earnings will go down. So they are the bearish camp. So the market is caught between those two forces. At the current point, the Fed is still hawkish. If you listen to what the governors are talking, you see that they're still worried about inflation and they still think the interest rates will keep going up. And the economists are still worried about the recession. Okay, the recession may or may not happen in the next 2 quarters, but they think it's going to happen towards the end of the year or maybe early next year. So if the recession happens and if the consumer spending coming down, the earnings will come down a lot. So that could be the driving force where the market goes. So the Q1 earnings could tell us, what happens to the stock market over the next few months. So there are a lot of uncertainties. So given that, what do we do? Where do we have opportunities for making some money, our investments? So because of all sorts of uncertainties, I think this is not the right time to make long-term commitments. Okay. So what you could do is wait for the earnings to come out, the Q1 earnings to come out, wait for the May Fed meeting to be completed and listen to the Fed comments, and then make a decision on whether it's the right time to start putting some money in the market for some long-term commitments. So given that situation, over the next month or so, there are many opportunities for covered call and covered put options, and there you can make some money. Okay. So what I'll do this week is I'm not going to talk about any stock but buy opportunities. I'm going to talk about one particular trading opportunity, an options trading opportunity in Tesla. Okay. All right. So let's look at Tesla stock, right? So you remember we looked at Tesla last year and we had forecasted, a low of 120. And Tesla actually went below that. It reached almost 100. And at that point, Tesla was a good buy. Then people realized, traders realized it was overdone, so they started buying it. And some of the news flows also started getting more positive on Tesla. So Tesla kept going up, and it hit, about 200, in February. And basically, in the early part of the year, in phase one, it was recovery phase, and then it crossed this red line. The red line is the moving average line. And once it crossed the moving average line, what Tesla has been doing is it's in a trading range. So it's going to around 200, and then it's coming down to around 170. So it seems to be a range bound between 170 and 200. And it moves depending on the news items, whether the news is positive or the news is negative, the stock goes up and down. And my forecast is Tesla is going to have a similar, behavior for the next at least 4 to 6 weeks. Okay. Now, one thing that you have to watch out is there's going to be an earnings release in May. Not sorry, in next week actually. I think it's Wednesday, and there could be big swings depending on what the comments are and what the earnings turns out to be. In any case, the forecast I'm having is going to be range bound. So when a stock is range bound, you have two opportunities. When it's at the lower bound, you can sell covered puts and make money. And when it's at the closer to the higher bound, upper bound, you can sell covered calls and make some money, make some premium. Now, to sell a covered put, you need to have enough cash in your in your account. When you want to sell a covered call, you need to own that call. Without owning the call, you can't sell a covered call. Okay, so be aware of that. So let's look at what exactly are the options telling us. So here is the table I have. So I'm looking at covered put on Tesla, and I'm looking at expiration on April 28th. So I don't want to stay on this type of trade for more than 2 weeks, right? And maybe at the most 3 weeks. So Tesla, was trading yesterday or Friday around 185. So I'm selling a covered put. So I'm looking at covered put around 175. And I'm looking at the premium I would get by selling it, which is 5.15 per stock. So if I sell one put, which is 100 stocks, I will get around 515 premium, okay, which is pretty good premium, right? Now, if you get $515 premium on a commitment of $175, so you're buying 100 stocks for 175, that's a commitment of $17,500. You're actually getting around 2.9% for 2 weeks, which turns out to be 76% annualized return, which is very good return. Okay, so it's a very tempting or a very good investment if you don't get assigned, right? Now, here is the catch. If you do get assigned, it's not a big deal because Tesla is going to be range bound. So if you get assigned and you have to buy 100 stocks of Tesla at 175, and then as it moves up towards the upper bound, say let's around, say 195. So there's a $20 profit you can make per stock. That means a $2,000 profit on your investment you make, again, within a month or so. So I think it's a stock which is worth owning in the short term as a trading opportunity. And by making this put call, covered put call, you will make some good money also. If you don't get assigned, you got this $415 and you can keep it, right? So one thing I think I have told you in the past is when you make a covered call or covered put, look at RSI, the relative stock index. And when the RSI is low, in this case, I'm looking at Tesla being between 40 and 60. So when it's more towards 40, the RSI, go for a covered put. When it's more towards 60 or above, go for a covered call, right? So that's a good opportunity you have here to make some good premium. and maybe even trade, if you have an assignment of this stock, okay? All right, so let's look at a covered call opportunity. So this is for people who own this stock, Now, what you can look at is, again, here I'm looking at covered call rates, and I'm looking at a covered call around 195. So I said the upper bound is around 200. So let's, zero in on 195. So here, the premium you get if you sell a covered call is around $5.4. So one covered call will give you $540. And that's on your own stock you own, and the potential for getting assigned is around 195. So that's really a 2.9% return for 2 weeks, which is again 72% annualized return, because it's a 2-week trade. And so whatever return you get here, 2.9, you multiply by 26. Okay, so given that, so you put this covered call, and then let's say, it does not hit 195 by April 28. And in that case, you keep that. But if it hits around 195 at that time, eventually it will come down towards 180. And then at that time, you come back and you buy the stock, because you may want to own the stock again. And you can play this game for a while. Okay. However, I think, Tesla may go down again. It may go down, a lot further than 170 sometime around the second half of the year, right? So we'll model that. We'll model that later on, after the sales come out and after some of the economic trends come out. Right now, there are two things playing on the Tesla stock. What is positive about Tesla is there's a lot of momentum for EV market because of the government initiatives and government restrictions on the internal combustion engine vehicles, right? The EPA restrictions. So that's very favorable to Tesla. And also Tesla has a big market share, it has a huge market share in the EV market. Now, what is against Tesla is the economic trends. The economy is not going to grow a lot, even if it grows this year. Plus, the price of Tesla cars are very, very expensive. They're more than 50,000 on an average. So the market for that may not be very high. The demand may come down this year. So that's what is actually pulling the stock down. So on the positive side, the EPA requirements and the market share is helping them. On the negative side, the economic outlook and the fact that the demand may come down is hurting them. So that's one of the reasons why they are range bound right now. Okay, so these are the two opportunities I wanted to talk about. Now, there are many opportunities like this. There are many stocks which are range bound right now, and you can play the same thing. You can have the same strategy applied to these stocks. So I would suggest that you go and look at some of the stocks you would like to own, or you're not afraid of owning, because whenever you play this covered put option, there is always a possibility you may get assigned. So if you play a covered put or covered call game, make sure that this is a stock you don't mind buying or don't mind selling. Okay. Anyway, so this is what I wanted to talk about this week. And next week we'll come back, not next week, in 2 weeks we'll come back. And we will look at how the earnings reports have come. So we'll have a better picture on the whole market. And maybe at that time, we can look at some buying opportunities. Okay. All right. Thank you very much. And we will come back next time. Okay. All right.